Good morning, traders. It's Friday, April the 15th. Taking a look at the charts this morning, we don't really have a whole lot that has changed. We've kind of foreseen a lot of this price action taking place over the last several weeks, and we're just letting this kind of top unfold. And as I've mentioned before, topping is a process and it drags out and it takes a long time. Bottoms, on the other hand, typically are a lot quicker. They happen in a V shape or they're a little, faster in time. But tops really do drag out because there's always a positive, a bullish bias in the market, and you eventually got to work through all those buyers and slowly turn that trend around and get that market moving down. So overall, this market here has been topping. Looks like you could argue we got a perfect head and shoulders formation here. Has yet to break this neckline that we're really looking for. But if it does break it, we're going to see a pretty strong drop in gold and miners and silvers. And back in 2008, we saw gold and miners. Everything crashed with the market, the stock market at the same time for the first more or less half or three quarters of the bear market because you end up getting margin calls and people are forced to sell their positions. Keep in mind, we've got record levels amount of margin, meaning most people are owning all their stocks in metals and on margin, which means when the positions start to go against them, they're forced to liquidate and it creates selling. Even though people are bullish on the metals, we saw metals and miners get completely hammered because people had to sell these positions. Now, overall, I am very bullish on gold long term. I think it's going to be great. I do feel as though we could see it still pull back some more. And if we take a look at the big picture of gold, we've had a lot of these rallies where we've seen these big jumps in price. These are huge rallies, very similar to what we have seen just now. And the only difference this time is that I think we've put enough time in that it's holding up a little bit better. We are seeing gold miners for the first time showing real life. We're seeing some of the leaders up to 300%. So this is we've got the signals this time that I think the basing pattern here is forming, and this will be kind of considered the main base. This will be kind of the second layer up here, but so I have a feeling it could struggle and pull back down in this lower base here for a little while. That being said, there's tons of upside potential, even if it gets into this second half up here. This is a major bottoming formation that would be forming, and when it breaks out of there, the next target will be pretty much 1750 or 1800, and then from there it's going to go up into the 2000s and continue to go higher. So this is still very early stage stuff. All these significant pivot highs, we're still making lower lows with these significant pivot highs. We have not broken this last significant pivot high. We had a bear flag form here, then it broke down. We had another kind of bear flag form here, and it broke down. But one of these significant major emotional highs where everybody, just like now, is getting super bullish on miners. These emotional highs here, these are the big rallies that gets everybody all pumped, and we are still making lower highs with those critical levels. We've got a lower high here and we got a lower low here. So, as much as I like to say, I think it's bottomed, we're in a bull market, technically we're not really even basing yet. We're still making lower highs and lower lows, but everything is showing, just like the stock market, everything is showing for miners that a bottom is probably in and the trend is changing. And for the large caps US stocks, we're not in a bear market yet. We haven't had that technical breakdown, but everything is showing the signs that a bear market is coming. There's just no strength in the stock market, and everything looks like it's about to break down. So we're at this very early stage. The stock market's at a topping stage, gold market is at a bottoming stage, and these could still play out for months before they really start to actually break out and start to move up out of these basing patterns and break to new highs, higher highs and higher lows. So let's just take a quick look at the cycle chart. So here's the cycle chart, and the cycles more or less go from the top of the chart down to the bottom. They just oscillate through this level. They don't give you the actual price, they just give you the bias. If they're trending up, you should expect price to go up. If they're trending down, you should expect price to go down. And you can see how we've had this kind of formation where we thought this last pop here that we traded, we thought we were going to get a breakdown and see it come down. Instead, it's just been holding its ground. It was under pressure. Overall, the average was moving down. And then we got this other pop, and now we're starting to move down. The question is, are we going to break this neckline support and finally move to the downside? Now, overall, if you look at the cycles here for gold, we've got the cycles fading down. And the way they're fading down here could very easily mean we just see gold trade slightly lower and trade sideways and just kind of consolidate here in a massive big bull flag, until more or less the end of May potentially. It doesn't mean it's going to come all the way down. It just might stay soft and consolidate and slowly just make nominal new multi-month lows here, and then eventually kick off and start a big rally going forward. So I'm not anticipating probably a huge drop, but I do feel as though over time it's going to struggle. I think people are expecting it to explode to the upside or break down really hard. I think it's going to just kind of chop and grind its way down with these smaller blue cycles, and before it builds the strength and starts to take off into the summer potentially. So that's kind of where we're at. And right now we've got all the cycles pointing to the downside. Looks like we've got another 1, 2, 3, 4 or 5 days. So by next Friday, we'll probably see a pivot low here in the market. And hopefully we do get a breakdown, and hopefully we can lock in more profits with our GLL, our inverse gold play. Now let's jump over to the SP 500. Got some pretty crazy price action going on here. Overall, let me just zoom way back here. Let's just go over the big picture really quick. I don't want this video to drag out too long, but overall, we get into big volatility. We get a topping phase. We get a breakdown over here in 2007, 2008, test those levels back up there, and then finally broke down and started the bear market. Well, I think that's very similar to what we're doing here. Let me just squeeze this all in so we can see it. I think that's very similar to where we're at. I think we're still in the early stages. We are in a topping phase right here. We have yet to have that breakdown and that final test before it goes into a massive bear market and really show some damage. We're still holding up above critical support zone. And for all we know, not that I really want to throw it out there, but this could be just a big bull flag and we see things explode higher. But everything that's happening right now is everything that happened back here. It's also everything that happened back in 2001 when the market topped. So overall, you can see we're in the very early stages of a potential bear market. We don't have a bear market until we break this support zone. Then we are now, to me, technically in a bear market. But this is an optimal time. We're making lower highs. You can argue here we've got lower lows, and the internals are weakening. And I think we're getting very close. We're like a week away, I think, from a market top here, from it starting a massive pullback. Now, knowing that, let's go take a look at the cycles real quick. All right, so here is the SP 500 daily, the SPY ETF, the daily chart, and you can see where we're coming at. Let me zoom in a little bit more here. So here we are with the daily chart. You can see we are pretty much 1, 2, 3, 4, maybe 5 days away from the market having this kind of this top here, this major cycle top, and then we've got a multi-month correction in play that could be it could be unbelievable. I'm really excited about it, to be honest. Anyways, we're super close. We've got an opportunity here to start to play the VIX because the VIX, if we do get this crash, the VIX is going to explode into the high 20s and 30s, and we've seen it go into the 70s before. So buying it at 12 right now is a killer deal. When everything is showing that we're going to get some strong selling in the next week or so, that could last a long time. So that's kind of where we're at in the grand scheme of things. Again, I think next week could be the top. I don't really want to miss out on this, but I hate to jump in early because we can get some of the strongest short squeezes and rallies in the market right here at the very last day or two. And I hate to get short and see the market do this massive 2 or 3% squeeze to the upside and we all get shaken out. And this is really tough. We're at a massive point here where it's going to be difficult to get in without getting shaken out. That's how the market likes to do it. But anyways, we are going to go for it. And as the market unfolds here in the next couple of days, maybe be taking our big inverse position, or not a big inverse position, but an inverse position, and we can build it over time. You don't need to pile in all at the same time. Sometimes it's better to get in the money, be sitting pretty, and then on the next pop or bounce, you can add to it so you've got a cushion of profit. It's not something you want to swing for the fences. Any trade you're swinging for the fences is a great way to blow up your account because there's no guarantee this is the top. It's just everything in my analysis is showing that we are at a significant top, and but that's all it is. It's just an opinion. So don't go crazy and use leveraged ETFs with all your money because one big short squeeze, the market always has a way of taking your money and the biggest moves happen right at the end of a trend reversal. Look at this one. Market came down, put in a double bottom. Look at the volatility, these huge price swings. Doesn't look like much maybe, but these are massive price swings in the market day to day, gap to gap. It's huge. So that same thing can happen up here at the top. All right, let's take a quick look at the percent of stocks trading above the 50-day moving average. This is another kind of long-term indicator. Anything above the 75 level, we consider the market to be getting overbought. It means every majority of the stocks right now, or 83% of the stocks are above the 50-day moving average, which means everybody's bullish, everybody's been buying, everything's been trending up for a long time. We are getting a kind of a megaphone pattern here. We're getting higher highs, lower lows. We're in that upper reversal zone, which means we're getting into volatility. The bulls and bears are fighting. Usually it means we're going to start to see this roll over and come all the way back down to the lower end of this cycle. So that's an early kind of warning that we're getting there. Now, if we take a look at the stocks trading above the 20-day moving average, this is a shorter term one, gives us a little better for timing. We've been seeing this indicator on average move down while we've been seeing the stock market move up to new multi-month highs. Divergence. This means on the shorter time frame, we're actually seeing fewer stocks moving up with the stock market. So the market is moving up with less power, less volume, and eventually it's going to have a big correction and come all the way back down to the lower end of this kind of channel down below this 30 mark down here. So we got lots of things starting to play out, and we are very close to a massive move, and it could be very exciting going forward. Last but not least, here is the chart of crude oil. We've been watching this for a while. We've had this pivot high and this Fibonacci low that came in right across here. We're ping-ponging right between those levels. We talked about it right when it came down here. We actually talked about how it hit the multiple Fibonacci levels. There was actually a little measured move from this move down to this low to this high. That measured move brought us right down there. This was also a retracement from this low to this high. This was, I think, a 3.8% retracement. So we had multiple things there. We've seen the market bounce. I talked about it testing, making a double top, pulling back, and you can see today it's already starting to pull back and move around. Now overall, I feel as though it could be something very similar to this over here, where we get the first move, we get a pullback, get the second move, and then we're going to start to see it kind of get a little bit weaker and potentially fade all the way back down to the lower 30s, the 32, 30 area, maybe even lower. We'll see how it unfolds. A lot is going to depend on what the US dollar does going forward. And if we take a look at the UUP ETF, we're starting to see that bounce in the UUP. And the UUP is pulling back a little bit this morning in pre-market trading, very similar to what is done kind of over here, where it's having a little breather. We'll see if it can actually break out of this above this level here and extend to the upside. If this does have a stronger bounce and can come all the way back up, who knows how high it'll go in this big sideways range, then we're going to see commodities and metals continue to be under pressure for the next couple months if it does have a multi-week, multi-month bounce. But if it does break down, you can see this level here, pretty significant pivot zone in the market. It's trying to hold its ground. If it breaks this though, we're coming down and we're going to see it bounce and continue to come down to these levels, and it could completely unwind. And this huge drop in the dollar index will send commodities through the roof, and we'll see the next kind of commodity, the safe haven. Commodities typically do very well right at the end of a bull market. So when stocks in general are starting to top, we usually see money pile into commodities because it's a physical asset. They seem to be the next place where money rolls, which all this is falling into suit. Or, I'm not a huge fan of crude oil. It is valued, I think, fairly well, but I prefer the precious metal side of things because it's more of a currency play, also a safe haven because we got serious currency issues going on. So anyways, if this plays out, we're going to see, gold and silver kind of, skyrocket to the moon and back. Anyways, that's it for now. Take care. Bye-bye.